All right. So Terry, this is the analysis I did on your stocks, or at least what you said you own this morning. So this is based on the weekly candlesticks. First one up is Netflix. So the stop is 1133.26. That's 1% below the low of the candle on August 4th, right here. If you take the low there of 1147, 1144.71 times 99%, it puts you at 1133.26. So really what I would have done on a long-term trade here is based on this weekly up here, I would have been out at 1% below 1271. I would have been out at about, 1260 or 1258. And then you could have got back in right above 1197. So you could have saved about 65 points there. Now we're just going sideways on that for about 8 weeks. So long term, it still looks okay, but the thing is, it's gone up, it's made a lower high, and it's just consolidating. So the stop should be below the last bullish candle. But that's that one. PLTR, stop of 140.91. That's 1% below the low of the August 18th candle right here. Again, that would have been a situation where you could have got out below 173.38, 1% below that, so about 172-ish or 171.75, and then you would have got back in at 163 area. So you would have saved 13 points on that, been back in, and then running into resistance again. And if this week ends this way, you'd put a stop below this week's low. So you could have saved some points on that one too. BLK, 1% below the low of the 9-1 candle. That's this last low right there. But again, this is another opportunity. This one you would have got out below this low here at 1118, and you would have got right back in just above 1119. So that one wouldn't have worked out in terms of might cost you a point or two, but overall you come out ahead based on looking at all your different positions. So, but now it's moving back up. So again, I would have a low though below here just in case it doesn't break out. Costco. This one is I don't know when you bought it or whatever, but I mean, bottom line is the best I can say now is to get out below the low of this bullish candle here of 925. That would put you out at 915.75. That's 1% below the low of that candle. But ultimately, whenever you got in, this should have been you probably could have managed it a little bit differently and a bit further ahead. Walmart, stop at $100.91. That's 3% below the low of the breakout close, which was back in February right there. That was a high close. So typically when you break out, or if you were to enter a breakout trade, you would put your stop 3% below the low of that close or the high. And I do it off the close. So that gives you a slightly lower breakout area. But you're butting up against resistance now. So, the best thing I would say is 3% below that. If you got out 1% below last week's candle, you'd be out at 101 or 101 something. So either way, that's a pretty good stop at 100.91. Okay, AVGO. The stop there would have been 1% below this high candle. That's where you would want to, get out and take those profits. 1% below that would have been 332 area. It's come down to 327, so you would have got out, and then you would have been able to get back in at, about 346. So it may not have worked out on that one, but in any event, you have to have a stop somewhere, so at worst case is if it ends this week this way, that's kind of a bullish candle. I would put a stop below this candle to protect yourself if it goes below 327.30. Otherwise, that's a higher high on the weekly, and it looks like it's making a higher low, so it's a super strong stock, obviously. But right now, if you were to put your stop below 3% below the low of the August 11th candle over here, that was a closer of 306.34 times 397% puts it at 297.14. And that's where you would want to be based on that. So you would still be in this if you kept that set up, that stop there, and didn't adjust your stop. But you also have a stop based on profit management, so you might have had a different stop to take advantage of profits as you move up. NVIDIA, the stop at 162.42, 1% below the low of the September 1st candle, which was right here, the low of this pullback. That would be a good place to put a stop. You'd still be in it. You wouldn't be stopped out, but if it does go below that, you probably want to get out, and protect your profits. But you could have got out at 177.21. That's really what you could have done up here under this candle. 1% below that bearish candle would have got you out, and then you would have got back in above this candle of 172. So you would have saved yourself about $4 on that. Western Digital, obviously huge profits on that. I would be placing my stop right now at 98.72. That's 1% below the low of last week, and then this week I would move it up below the low of this candle. 106.29, so that I would get out and protect my profits, and then I would look for re-entry. And then TSSI, stop below 1390 at this point. That's below the low of last week's candle, because this is downtrending. Well, it's uptrending on the 2 years, but if we go back to the 1 year, let's see here. On the 1 year, it's still uptrending slightly. But, there's major reversal here. When it broke this candle right here on this pullback, that was definitely, you want to be out below that. And so it's downtrending now. So it's on a 3-month downtrend, I think, if we look at the daily. So let's take a look. So that's something I'm looking to protect myself. I mean, you could stay in there now, but I wouldn't be holding on to it. If it doesn't, I would be definitely putting a tight stop. And so technically, this is the 3-month trend. You can see we're down 3-month. The close over in June was there, and now we're down here. So it's a 3-month downtrend, very weak, but it has reversed, at least on a daily basis, breaking out of this resistance, and now it's a bull flag setup. So again, I would have a stop. Okay, but it looks like it might go higher. And so, if it does go higher, it's going to have resistance at the 23 area, which is, an 8-point move. So you can make a lot of money on that still, but it still is a downtrend. So anyways, hopefully that helps.